In today's trading session, gold has hit highs of 1804, well above the $1,800 mark. These are the August contracts for gold futures, and we are now testing 8-year highs as we try to close above 1800. Currently, we're at around 1798. In the past, we've seen how we try to break above this level back in 2011 and 2012, but we failed to break above it about 3 times, and now we're trying for the 4th about 8 years later. As you can see over here, we tried to break above it once in November of 2011, again in February of 2012, and once more in the October of 2012. But 1800 does appear to be a very stubborn level of resistance, so it'd be very interesting to see as to whether we could break above it the 4th time, now in June of 2020, almost 8 years afterwards. Gold has moved higher in recent times as the fear of another coronavirus shutdown adds to the probability that the Fed might add to the fiscal stimulus and possibly continue lowering interest rates. At the moment, I do not think interest rates are going to go below 0, but anything's on the table if we see another massive outbreak of coronavirus. And the first time around, the first coronavirus package was about $2.2 trillion worth, and we might see another coronavirus stimulus package in the next month. I believe Trump was saying something about how it's going to be very generous. So if we do see another round of payments, or if we do see more money being flown into the economy, the dollar should continue to be devalued. And as a result, we see the more reason as to why gold might move higher as a hedge against inflation. I don't know if there's actually going to be inflation this year, given that coronavirus has halted a lot of businesses. But in the past, we have seen that gold rises tremendously during times of market panic. And it's no exception for this year, as gold is now hitting 8-year highs. I don't know if we're going to break above 1800 the first time we try to test it, seeing that we try to break above it a few times before. And 1800 appears to be a very, very strong level of resistance. However, given the fundamentals at the moment, I feel as though gold is nowhere near the end of its climb, and in terms of nominal value could very well reach all-time highs. If we break above 1900, we are going to be testing highs from August of 2011, and I do believe in terms of purely nominal value, I think there's a real possibility that gold breaks out to all-time nominal highs of around 1920. Some people are suggesting that gold at the moment is a little bit overbought, and I would be tempted to agree. We've seen that we've rallied quite a bit since the $1,600 mark, and we didn't really make too much of an extended pullback. But, if you look back at 2012, we sort of made like a cup-shaped pattern over here. From the very beginning and the very end, the slope of it is pretty extreme, as you can see here. So I don't think we really need a large pullback in order for us to move higher. We might just move higher without a pullback. But still, 1800 is a very important level of resistance. I don't know if I'd be buying at this level until we break above it, in which case I might just be holding until 1920 as we reach all-time highs in terms of nominal value. If coronavirus is completely done and through and the Federal Reserve says we don't need any more stimulus and we're going to raise interest rates going forward, then yeah, I think gold might crash. But at the moment, I believe the Federal Reserve said they were not looking to raise interest rates until at least 2022, which would spell out very good news for gold, at least for the foreseeable future. In terms of what gold is at the moment, in terms of its niche in the market, I think it's somewhere in between cash and stocks in terms of speculation. But gold does serve a unique purpose in that it's a hedge against cash. Stocks, on the other hand, are very speculative, and one could view them as a hedge against cash. However, some companies are very much affected by coronavirus, and if we do see another outbreak, we might see the stock market move a leg down, whereas we might not see the same for gold. Gold has some correlation with the stock market, as we can see in March when the gold market and the stock market had simultaneously crashed in early March as investors try to flock towards cash. However, in the grand scheme of things, we now learn that corporate earnings are not terribly affected by coronavirus, at least for certain companies, and people are reinvesting in gold very massively. In fact, I think most sell-offs are not due to gold being fundamentally weak, but rather just due to people needing margin to cover their other positions. So as a result, I think gold is fundamentally in a very strong position to move to all-time highs should we break above 1800. I would expect to see that happen in the next few months or maybe a year. With all that being said, I thank you very much for listening to my analysis on gold futures, and I wish you best of luck in your trading. Take care.